$10 per share of value to Tesla based on all of the charging announcements.
This Wall Street analyst says that Tesla stock is going down all the way to $112. What is he thinking? Is he thinking that Elon Musk will sell Tesla stock again? Well, either way, I do hope that Tesla stock does go down this low so that I can again pick up some really dirt cheap Tesla shares. Unless we have a scary recession, it does not seem that the chances are high that we will go down that low again. But let's see what he has to say.
Guggenheim Securities Vice President Ron Yesikov in a note saying Tesla's charging partnerships could prove profitable, but not enough to justify the stock's current price. He joins a group of Wall Street firms skeptical of sky-high Tesla shares and skeptical if they're worth their hefty price tag.
Yeah, we put out a note earlier this week for clients kind of outlining the charging business going out to 2035 and looking at the number of electric vehicles we expect to be on the road. Just close to 80 million, and what market share Tesla will have, which we think it's 50% plus.
Just to be clear, I don't think he means that we will be producing 80 million EVs per year in 2035. I think what he means is that we will have 80 million EVs in the US on the roads in the fleet. And right now we only have about 1.7 million EVs in the US.
And ultimately, our analysis showed that the charging business could generate something like 50 cents of earnings in 2035 in the U.S. And while that's still a meaningful amount of earnings, it's tough to justify the move in the stock based on that. We get something like $10 per share of value to Tesla based on all of the charging announcements, and the stock since the initial Ford announcement has went up about $70 per share. So it's a bit tough to square.
One of the more bullish takes that I have seen about Tesla supercharging network says that in 5 years, it would equal $3 in earnings per share, which could equal to $60 added to Tesla stock if we use a multiple of 20. Although if we use today's price to earnings multiple of 75, that could almost double Tesla stock from where we are right now. Although just for the charging network alone, that multiple seems a bit high right now. This calculation, though, includes charging to all of Teslas as well, not just to vehicles that are not Teslas. Anyway, I think Larry is closer to the truth than this Wall Street analyst, Ronald.
The netting of these partnerships, is that a net positive for Tesla, or is it more so something that is to the benefit of the other companies in traditional auto manufacturing that have been able to step into these charging partnerships with them, Ford and GM?
I think it's still an open debate. Obviously, the economics of the charging business flowing to Tesla will be a positive. I think, and we've written this for several years now, that the supercharger network is and will remain one of Tesla's largest competitive advantages. It's a fast, reliable charging network that consumers love. And these partnerships allow access for other manufacturers that specialize in building vehicles to have access to those chargers. And it's been publicly disclosed that Tesla is not going to be charging extra for owners of other vehicles, whether it's GM or Ford, who are part of this partnership. So I think that those OEMs, customers having access to the charging network could ultimately lead to share losses for Tesla. But I think that's a time will tell kind of situation.
I'm actually not all that fully convinced that Tesla will not charge more for supercharging if you do not own a Tesla. It may do it in many different ways. For example, already when you buy a Tesla vehicle, some of the time you get free supercharging, and if you buy any other vehicle, you don't really get that. And let's remember that if you don't own a Tesla, you don't get access to all of Tesla's supercharging network, but if you do own a Tesla, you get access to every single one of them. Also, just like we saw earlier, Tesla may continue just charging for subscriptions, and only if you pay for a subscription, only then you pay the same price as Tesla owners. But of course, if you have a Tesla, then you don't need a subscription.
Ron, you talk about that the case for this charging network doesn't justify the price. Of course, many of your rivals at other firms who are still bullish on the stock It's partly because of the charging network, but it sort of has to do with the stuff that always has to do with why people like Tesla, right? Sort of grand ideas of what it is going to be, whether it's an autonomous taxi owner down the road, or whether it's going to start licensing its software and technology, what have you. What do you think of those sorts of concepts of what Tesla will be?
Absolutely. It's a great question. I think on FSD specifically, I think our view has been for some time now that as a level 2 plus system, it's very attractive and can be a very good business for Tesla. We have nearly $100 billion of ascribed valuation in our DCF for full self-driving as a level 2 plus system. Where we have trouble bridging the gap is to robo-taxis and the market confidence in robo-taxis. I think we've seen that progress in FSD has been slower than Elon Musk has expected, and with it's really tough to understand where the market's confidence in robo-taxis come from. You hear things like data, but the application of that data is tough. You need a lot of compute on the vehicle to utilize that data effectively, and I think it's reasonable to be skeptical if the current vehicles with so-called hardware 3 have enough compute on the vehicle to effectively get to actual robo-taxis.
I'm so glad that he brought up the data and the compute issue, because supposedly Tesla's hardware is never going to be enough to solve full self-driving, no matter what kind of computer you put in the car. A year ago, I said that it is not going to be a big deal for Tesla if Tesla cannot solve full self-driving using hardware 3, because Tesla does not have all that many vehicles in the fleet yet, and if Tesla did need to upgrade these, probably it wouldn't be all that super difficult. It wouldn't be easy, of course, and it would cost money, but it's certainly not impossible. And if, let's say, upgrading from hardware 3 to hardware 4 is too difficult, you can just make hardware 3.5 that will be an intermediate version between the two, which would then fit easily into the old vehicles. And hardware 4 is pretty much almost here anyway. But most importantly, Tesla's fleet is growing so fast that in just a few years, Tesla will make more cars than it has ever made combined. But actually, hardware 3 could be enough, and let me walk you through why. If I was uneducated about AI, I would believe him because his argument sort of really makes sense. However, you can actually run a large language model similar to ChatGPT on your laptop or your PC that is not a supercomputer. Who would have thought about that? This is a pretty slow computer, and generally it works just fine. Here's an example of a computer that is not a supercomputer working just fine. Although if you do run it on a slow machine, it will be slow. However, where you do need a lot of compute is training the model. That takes a ridiculous amount of computing power. And I saw one tweet earlier that showed that Tesla uses its supercomputers urgently most of the time. In other words, if we had a lot more compute, then we would be making progress a lot faster. Tesla is planning to get to 100 exaflops of compute, which would put them about 100 exaflops ahead of the competition. So this analyst is not thinking about it right. Training is difficult, that's where you need a lot of computing power, but once you have that model, you don't need all that much computing power.
I don't think they really will monetize the data unless we're talking about licensing FSD, which I think most OEMs have their own strategies around ADAS level 2 plus.
Oh, just like they had plans for supercharging their EVs. Yeah, well, the competition has come to charge at Tesla superchargers. The same thing will happen again with full self-driving. Every single smart company will license Tesla's full self-driving technology, but they will wait for as long as they possibly can.
Beyond that, I think monetizing data is pretty tough in automotive. There's been companies that have tried to do it, and it has been a struggle. But beyond that, I think the licensing FSD would be the main avenue. I just think we're skeptical that other OEMs would actually opt in to FSD when there's viable public alternative or viable alternatives from other suppliers that can offer level 2 plus systems competitively.
Yeah, exactly. Just like there are many other companies that offer charging for electric vehicles, and yet somehow they are nowhere nearly as good. And this is physical infrastructure that we are talking about, things that are not really all that difficult to figure out compared to Tesla's full self-driving software. So if they can't even figure out supercharging without Tesla's help, how will they figure out full self-driving? And YouTube wants you to watch this video next, but if you haven't finished watching this Elon Musk interview, then watch this one first. My name is Matt Postius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.